Welcome to Major Market Mondays. My name is David Williams. I'm your host. Last week was a great week. The market was up. I felt pretty good about it. This week, we're going to cover some things that kind of help us stay on the up and up. So what we're going to cover this week is going to be called how to play defense in the market. Now, what that means is we're going to cover things that are going to work in your favor when the market's down. Okay, so a few things that we'll cover, of course, are going to be, what is a bond? Bonds are going to be something that is very important during this time. Then we're also going to cover things like what's a defensive stock. So we got stocks that we go after when we're trying to be very, very aggressive, but what do we do when we want to be defensive? And then the third thing that we'll cover today is going to be how to diversify your portfolio. A lot of people hear that, but they don't know what that means. It could be a collection of stocks and bonds or mutual funds. We're going to cover all those bases today. Of course, we're going to follow up on what we did last week for our sleeper pick, and we're going to tell you about our new sleeper pick. So let's go ahead and get started. Now, what is a bond? A bond is debt. That's exactly what it is. It's a company or entity that owes you money, and they give you a low interest rate usually on that. The thing that we love about bonds is most bonds are backed by either a business or the full faith and credit of the federal government. Why that's important is during a time where markets are down and we're not getting as much interest in the stock market, it's time to get some bonds so that we could quote unquote diversify our portfolio, which we'll talk about a little bit later. But the bonds are going to give us low interest but guaranteed interest, and they're going to be set for a period of time. So usually you could get a local bond called a municipal bond, which is usually really good when you live in a metropolitan area. Maybe they're trying to build a bridge or a school or a levee, have levy tax and things like that. Then you get a municipal bond. Then you could get what they call a federal bond, which sometimes can be a treasury bond, and treasury bonds come in different amount of years. Sometimes you'll see those on like CNN or MSNBC, right? So a treasury bond is just going to be a federal bond versus a local bond. The reason why we like bonds is bonds and taxes are tied hand in hand. So when you have a bond, you don't pay taxes in the jurisdiction in which the bond stands. So you don't pay federal taxes on a federal bond, and you don't pay local taxes on a municipal bond because that entity is indebted to you. Okay? The reason why we use those is because they're really good at balancing a portfolio. And we'll get more into that when we talk about diversification, but we want you to know what a bond is because a lot of people were talking about stocks, but bonds are very important in this market as well. All right, now what we're going to cover is what is a defensive stock. So we talk a lot about being aggressive in the market and trying to make money because the goal is to make generational wealth, but we got to be smart at the same time, right? So a defensive stock is a company or entity that usually makes money during a time in which the market's down or a recession. Things that people do every day that they have to keep doing. So companies that are utility companies are really big right now because paying the electric bill is something that just has to happen. They're going to continue to grow during this period of time and pull in revenue. We also have food companies. People love to eat, and I'm not talking about restaurants and sitting down and but just food companies in general that develop food. So I had a great company about a year ago called Beyond Meat. They make the plant-based burger. Those are things that are really fad, but there's something that's very important in the time right now because people are still going to eat. There's companies like Heinz. They produce all the condiments for every type of product that you can think of, as well as some other services. So you start thinking about those companies when it's like, hey, the market's getting tight. I need to start thinking about which sectors to invest in. So we have energy, we have utilities, and then we also have like the precious metal space. I've talked about gold to you guys 2 or 3 times now. Gold works inverse to the market. It allows you to have a hedge, and it's great for you in the long run. So you have gold, silver, bronze, and you also have some other metals that you can invest in. One other thing that people a lot of times ask me about is Bitcoin. Bitcoin is a decent hedge. I wouldn't put too much into it because I don't invest in anything that I can't really buy a house with. You can cash it out and turn it into something else, but if I can't go to the bank and say, hey, I want to go ahead and buy this, it does make it really hard for me to believe in that. All right, which brings me to my next point, diversifying your portfolio and what that looks like. So a lot of times out of 10, you want to make sure that your portfolio is balanced in some way. When you sit down with an advisor, they usually talk to you about risk tolerance and kind of how aggressive you want to be. There's multiple different ways to be aggressive, but there's also ways to be conservative. Sometimes you do more stocks, sometimes you do more bonds, but finding your sweet spot is something that's very important, especially in a market like now. I love people that are aggressive because the more risk you take, the more, more money you can make. But there's also a sense of understanding and being smart to actually investing in the market as well. So you want to make sure you're not biting off more than you can chew. So when we talk about diversification, you can buy stocks and you can buy bonds and you can do what they call building the portfolio. So naturally, there's a percentage or a mix that you look for. If you're aggressive, then we're looking for pretty much an 80% stock, 20% bond, or somewhere in that area. 90-10 is also good, but you want to have it ratioed out so that way you have a portfolio that's balanced. There's also a 70-30 split, and if you want to get more conservative, there's a 60-40 split where you're doing 60% stock and 40% bonds. Anything lower than 60% stock can be considered what they call fixed income portfolios or completion. A lot of times as you get closer to retirement, you want to take the least amount of risk, so you go into more bonds so that way you can take all of your risk down and get your guaranteed money. All right, guys, now it's time to look at the sleeper pick from last week. Sleeper pick from last week was Barrick Gold. I picked them because gold works inverse to the market. We had an up week, but Barrick still made you some money if you invested. They opened up around $18.50 on Monday, closed around $19.70 on Friday. So it's still a good win. I looked a little bit earlier today. They're still going up, so keep those in your portfolio because they're going to help balance it. Congratulations on y'all that did invest and made some money. This week, my sleeper pick. I love healthcare. Right now, healthcare is amazing. I mean, we know that coronavirus is out there. We know that more people are going to the hospital. We need more ventilators. We need more things, in the medical space. There can't be enough masks, things like that. So we could go big companies. We could talk about United Healthcare. We could talk about Johnson & Johnson. Or is this company called Merrick & Company. All right, Merrick & Company is a smaller company. They're still trading around about $75, $76 a share. So they're not, cheap. But I think that they're going to have a great week, great month, great year because they produce a lot of the products that the medical offices need right now. Those masks, those gloves, just general things that are coming in and out of these cities that into the hospital space. So pay attention to them. They are very important. And this week, as far as being a sleeper pick, it'll be amazing. Check with me next week. We're going to follow up. One other company that did great this week, Boeing. I know y'all that bought Boeing last week. It was like $96 a share. Ended up closing the week around $180 a share. You almost doubled your money if you bought into it, all right? And those cruise lines that we spoke about, hey, we got Carnival, we got Norwegian. They all kind of, moved up. With this new bailout coming, it's going to be great to kind of get in that space. Like I said, you might lose some money up front just because they're smaller and they're going through that process. They're not really bringing a lot of revenue in right now. But in the long run, they're going to make you a lot of money. We just got to be smart and hold them. You got to buy and hold those. All right. So if you have any questions, man, feel free, comment below, like, comment, subscribe. I'm taking all the information that you guys are giving me, good feedback to continue to produce great content. And if you have any questions, man, feel free to hit me on Instagram at dws.financial, or you can hit me on my YouTube page. Just leave a comment underneath and I'll reply to you. All right. Thanks so much. If you have anything left for this week, man, y'all stay safe and be blessed because this coronavirus is real. We're going to shelter at home. We're going to keep trying to help you make money.